Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast. I'm your host, Jacob Ayers. This is Friday Fundamentals. Hi, and welcome back. I have an awesome Friday fundamental lined up today, and that is an infinite return. So let's jump right into it. Let's take two scenarios. We're going to compare two different fourplexes, each located in a different market. Fourplex number one is $250,000. Fourplex number two is $750,000. I'm going to ask you, what is the better deal? If you said number one, I regret to inform you, no, you're wrong. If you said number two, I also regret to inform you, you're wrong. It's not. Why is that? Well, we don't have enough information to decide on price alone. Let's take a deeper look into the psychology that price plays. As a real estate investor, the purchase price of a property is often the first thing we look at. However, price is not the most important number when analyzing a real estate investment. Before you hit stop and think I've lost my mind or have a rich uncle with deep pockets, let me explain. You may have heard the term, you make money when you buy the property, or something along those lines. So wouldn't the purchase price be a critical factor? Let's go back to our two fourplexes. Fourplex number one, the $250,000 property, is in rural Kentucky. It's a 1970s construction, Class C property with more deferred maintenance than you would prefer. The total rents on that property are $2,000 per month. Now, fourplex number two is in the heart of Austin, Texas. It's a 2000s construction, great location with proximity to high-paying jobs, and has upgraded finishings throughout. This is a Class A property. The total rents are $8,000 per month. So, which is the better deal? While it's still hard to say at this point, we can start to see that the rent-to-value ratios for fourplex number two in Austin are a good amount higher than they are for fourplex number one in Kentucky. If we continued our analysis comparing property taxes, insurance, operating expenses, etc., we would come down to the metric that really matters to us as real estate investors. That is cash flow. Cash flow is important because it allows us to do several things. It allows us to hold the property as long as we need and not have to sell during a down market compared to if we were buying for appreciation. The cash flow we make is profit in our pockets. And by having a positive cash flow, we know the property sustains itself and won't require additional capital investment. And lastly, we can reinvest the cash flows and exponentially scale our real estate portfolio. Real estate cash flow is the economic driver in our investment decisions. I don't know about you, but I'm not sure what will happen in my market, let's say 6 months down the line, next year, or the year after, or anytime into the future. I would rather buy a property that creates positive cash flow so that I can hold on to it for as long as I want, and possibly my entire life. Another metric that we can use to compare properties is the cash on cash return, or COC. This is the ratio of annual cash flows to the total amount of cash invested. Think of that like the down payment, closing costs, upfront repair costs, etc. So let's take our fourplex number 2 in Austin, Texas as an example. Remember, we purchased it for $750,000 and put the traditional 20% down, or $150,000. With monthly rents of $8,000, let's assume we're cash flowing $1,500 per month, or $18,000 per year. That means our cash on cash return is $18,000 divided by our initial down payment of $150,000, which equals a 12% cash on cash return. Sounds pretty good so far. So continuing down this path, let's look further into the future. This property is in Austin, Texas, where the population is growing, jobs are moving to, and the demand is increasing. Our rents and property values continue to rise over the next 5 years. Eventually, we've built up significant equity in our fourplex by our tenants paying down our property, the property value rising, etc. But as we know, the rate of return on equity is 0. Yes, the rate of return on equity is 0. So we decide to refinance our fourplex and cash out our equity. For the sake of not getting too deep into the numbers here, let's assume we're able to refinance for a higher loan amount and we can pull out $150,000 in equity, which just so happens to be the exact amount of money that we put into the property with our initial down payment. Our new cash flows are now only $1,000 per month. But let's look at something really vital here. We want to calculate our cash on cash return again. Our annual cash flows divided by the total amount of cash invested is the cash on cash return. So our annual cash flows are $1,000 per month, or $12,000 per year, divided by our total amount of cash invested. So how much cash do we have invested at this point? We pulled out our initial $150,000 in equity, so we have $0 invested in the deal currently. $12,000 cash flow divided by $0 in total amount of cash invested equals an infinite return on your investment. That means all that cash flow you receive is free money to you. You no longer have any of your money in the property, and every dollar you make is an infinite return. You have just unlocked the power of true wealth creation. So now that you have your $150,000 originally invested in your fourplex back in your pocket, you could go do this again and again, snowballing your portfolio while generating passive income and along the way building wealth. This is the real estate way to wealth and freedom. Yeah, the purpose of this entire show is built on this fundamental right here. The real estate way to wealth and freedom. And with that, that is our Friday fundamental, how you can achieve an infinite return on your investment. Hey, I really hope you're getting value from this show. What you are doing right now is an infinite return by investing in yourself. Forget all of the cash on cash returns. Forget the returns on your investment properties. The investment you are making in yourself by listening to this podcast is the best one you can make. It is an infinite return. It is an asymmetric risk return, meaning there is very little risk other than you wasting 10 or 12 minutes listening to my voice this morning. And in return, you get concepts just like this, along with the much more valuable content from our weekly guests. So I hope I'm bringing value to you each and every week with this podcast. If I am, I ask that you go over and leave a rating and review on whichever platform you're listening on. It would help the show out so much. Well, hey, with that, let's wrap up. I'm so glad you're here. For more information, resources, and to connect with me, you can do so at www.jacobayers.com. realestateweightowellthandfreedom.com. Till next week, engineer the lifestyle you want.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.